I sold the exact bottom of Alibaba stock, and I regret it immensely. Welcome back to Strongman Personal Finance. So Alibaba stock is currently trading at $137. Oh, excuse me, $136.35. And had I held Alibaba stock, I'd be up about 0.5% right now, which would have been a redemption. Because if y'all remember back in 2022, I saw that China's stock valuations were absolutely collapsing. And I saw extreme, or what I thought was extreme fear in the market, where everybody was predicting that China would go to zero. Their population was collapsing, even though that's going to happen over the next couple of decades, not right now. China was uninvestable. China was communist, even though it has stock market and billionaires, and all sorts of nonsense. So my theory was, I thought China would potentially go through some temporary hardship, especially with their property bubble. But in the long run, I imagined that China would recover. So I averaged down, and my basis in Alibaba was about $135, and that's when I stopped buying. And primarily it was because it was becoming too large a position of my portfolio. I like to keep individual stocks, if I buy them, total cumulative at a maximum of 5% of my portfolio, with the rest going into the VT ETF, because I can have a little bit of fun. I can, pick stocks, whatever. Oh, I try to beat the market. And then, worst case, I make a huge mistake. I blow up 5% of my portfolio. It's bad, but it's not the end of the world. So that was kind of my philosophy. And then, of course, Alibaba proceeded to collapse massively. And I think it went down to like $60 or something like that. Like it absolutely collapsed. Like the amount of fear and pessimism around China was incredible. And after a lot of hardship, I decided to sell Alibaba and put it into a China ETF. And the reason I did that was because I wanted a tax loss harvest. I had about 3,000 in losses in Alibaba stock. And I said, why not just sell Alibaba, harvest the loss, and then buy a more diversified China ETF. And if China ever recovers, the China ETF itself will probably do pretty well, and I'm not as exposed to an individual stock. So I sold Alibaba stock, harvested a $3,000 loss, which I actually just used on my taxes this year because it rolled over or whatever. And I bought a China ETF. And then what happened was, I was in Robinhood, right? So I had my China in Robinhood. And Robinhood is just so toxic, it entices you to trade. So I had 7-8 grand in Robinhood. And every once in a while I'd be like, you know what? I'm kind of bored. Let me see if I can screw around. So I'd like buy a call or buy a put on something. And I'd, lose $100 here, lose $200 here, make $100 there. And I was starting to get pissed because I realized what Robinhood was doing. It was enticing me to trade. That's how they make money. They entice you to trade. And I said, I got to get out of freaking Robinhood. I'm so sick of Robinhood. It's so toxic. It's so evil. It's so disgusting. It's so exploitative that I decided to completely clear out Robinhood. So I sold everything in Robinhood that I could, transfer the money out, and then put all that money into a solo Roth 401k. So I completely cleaned out my Robinhood. So basically, my exposure to China is not as big as it was before. Now, do I still have some investments in China? Yes, I do. But I will never, ever, ever disclose how much I have, how much money I made, what my plans are. I will never, ever, ever disclose again if I do an individual stock trade or an ETF trade or anything like that. Because I learned a couple lessons. Number one, the retail brain is very slow and special. Very slow and special. How a retail investor works is they don't see the stock market as somewhere where you invest over your lifetime. It's not a place where you accumulate, a partial ownership in thousands, tens of thousands of companies and hold it over your lifetime and live off the future profits when you finally reach retirement. How people see the stock market is it's a casino where you buy something, you hope it goes up real quick, and you sell it. That's how they see the stock market. So if you have a thesis, you say, oh, I don't think China is going to zero. I don't think it's going to collapse like people said. I don't think it's the end of the world. And maybe I'm wrong. Maybe I'm wrong. When you have a thesis like that, you're not going to have temporary vertical lines. You're not going to have this, you're not potentially going to have massive quick recoveries. So when somebody sees you buy something that you think could be a 5, 10, 15-year investment, they only look at the short-term performance. And that's exactly what happened with Alibaba in China. So when China continued to collapse and the stock went down to $60, I was getting brutalized. Like, it was pretty freaking bad. And I realized it took away from my core message. Nobody really focused on the fact that I had 95% plus of my portfolio in VT. And my philosophy is you dollar cost average into a total world index. You always buy, you never sell, you never time the market. As soon as you have money, invest it, leave it alone, don't look at it, reinvest dividends. And over your lifetime, with efficient markets, you'll be able to retire, probably better off than most people. That wasn't the primary focus of a lot of people. The primary focus was you bought Alibaba and it went down. And then you bought it and it went down more. So it really distracts from the message. So I want to reiterate, I believe my philosophy works. I believe it will be successful. But the last thing you want to do is publicly display your portfolio, because you will be relentlessly mocked unless you bought the most successful stock in the stock market, basically. That's kind of how it works. So my advice to you is, as an investor, you need to keep at least 95% of your portfolio in a total world index fund. You keep 5% for fun. And if you want to invest that 5%, don't do it in Robinhood, because Robinhood is so enticing. It entices you to trade. You're going to lose freaking money. Okay? So instead, you take that 5% of your portfolio, put it in a legitimate brokerage that doesn't entice you to trade as much. And just, if you think it's a long-term investment, just buy it and don't look at it. That's my only advice to you. Because you don't want to tell people, because the public ridicule will potentially impact your investment decisions, or the whole, whatever's going on in the stock market at the time. If the stock you bought isn't doing well and everybody knows it, they're going to attack you. Even though your thesis may be right in the long run, the amount of ridicule and hatred you get, it's not worth it. So keep it to yourself, keep it discreet. If I ever make a trade again, like let's say, I don't know, Indian stocks collapse and people start saying India's going to zero, and I want to buy an India ETF, I'm probably going to do it in Fidelity, and I'm not going to freaking tell you that I did it. Ever. Because the way I think is, I think, a little bit different than a lot of people on YouTube. So that's my advice to you. So am I still exposed to China? Yes, I am. Is it a massive position? Of course not. It's way less than 5% of my portfolio. And do I think China is finally is China finally coming back? It's possible, because you can kind of see that, Mr. Xi is kind of being friendly and warming up to business tycoons in China. I think they just had a big meeting. And, I don't think China's going to zero. I don't think their population is going to collapse, or at least in the short term. And I think the country is doing whatever it can to try to, stimulate the economy. So am I bullish on China? Personally, yes, just because of valuations. Does that mean you should invest in China? No. And even if you do, should you disclose it? Absolutely not. Keep it to yourself. Keep it to a minimal part of your total portfolio. If you have a long-term thesis, stick to it. Don't look at it. Weather the waves. And in the long run, hopefully it works out. And if it doesn't, it's not the end of the world. Okay? So that's my update on China. Probably not going to talk about it anymore. And if you want any more stock tips or trades, bro, I'm never going to freaking tell you again. Ever. what I'm doing. I mean, I could be all in on MicroStrategy right now, and you wouldn't know, and I won't tell you. All right, guys, have a wonderful day. Cheers.